Hi Kush, a very good morning. Always a pleasure talking to you on First Take here.
Hi,
Now,
good morning, guys. Always a pleasure to be here.
so Kush, after hitting that low of 18,837, in the last week of October, Nifty has rallied by about 550 points. Looks like we are heading for a blockbuster close for this Samvat, isn't it?
Well, certainly would look like, and if I can, on a very light note, say I told you so. Well, we did speak about it the last time around I was here, and see, my point was the same. I still maintain that 19,200, is a congestion zone. We might spend some time here before we sort of make a dash towards 20,000, or maybe again 18,800, depending on which way the range breaks. But for now, we're very clearly in a near-term uptrend, and if you've got to take a trade, it has to be on the long side. But as I said, on the indices, we do see some kind of a pressure, at least for the next week or two, where 19,500, maybe if I can push it a little to, let's say 19,600, the indices might perhaps remain in a range. And it's not a bad thing, because even if the indices are, firmly in that range, it'll keep that sentiment high where, the stocks can do their own thing. Much like what Pat Cummins did yesterday while, Glenn Maxwell did what he did, right? What he does best. So that's the kind of partnership that we'd be looking at. I wouldn't mind if the Nifty holds on in a 100-point range from here on, while it gives a positive sentiment boost to stocks.
And what about this buoyancy that we are seeing in, in the mid cap and the small cap space? Traditionally speaking, historically speaking, broader markets are the first one to correct in the face of volatility. But not this time around. Small cap index is the only index which has, scaled lifetime highs in the past couple of sessions. What's the view there, sir?
So let's just understand why this is happening, and why, as the cliche goes, this time it's different. Uh, in the last couple of years, let's say, even if I put it like the last 4 or 5 years, there's been a structural change in the economy where a lot of participation has started in equities. Now, even despite that, this kind of participation, the lot of action that happens in a handful of 150 stocks in the Indian markets. They have the bulk of the volumes. But with the equity base, and by that I mean the capital base, the asset under management, with the mutual funds, and more and more people getting active in the investment, in the equity investment side of things, uh, there is bound to be some buoyancy, some action in the small cap and mid cap space. And I've said this before also, right here on this show, where a lot of them who invested in large caps over the last 2 to 3 years have actually sort of felt the pain where there was very clear underperformance. I won't be surprised if the small cap and the mid cap rally does continue for the next 5, maybe even 10 years, because the base is growing. We
Wow.
need more and more companies where, investors can, participate. So I won't be surprised if this trend does sort of continue. Of course, we'll have, blips and moments, but otherwise I still see this trend to continue for the next 5 to 10 years.
Any particular sectors that, can participate or lead that rally in the next 5 to 10 years, as you mentioned?
Interestingly, and it may not be such a fancy sector, but I think the banks and the NBFCs are perhaps going to lead the way. A lot of other things will of course fall, work for them, but also the fact that they're like a proxy play to the consumer story in the India right now, that itself is going to perhaps play out. We're still bullish on autos and auto ancillary as well, and then also the entire real estate universe. So I'm giving you broad lists, but I think these are the couple of themes that we're looking at. We're looking at banks and NBFCs. We're looking at consumption plays, and we're also looking at some real estate plays, even if it is through the home improvement themes. But I think these these sectors, these pockets, still have a lot of upside.
Good morning, Kush. You spoke about the banking sector. There's something about a trend that we had observed yesterday. Now, SBI, which posted its results few days back, reduced its provisions by as much as 96%. Then we looked at the trends, whether it is ICICI, HDFC, most of the banks, they are on a trend of reducing their provisions. Do you think they are doing this just to shore up profits, or is there have they become so organized and confident of their background checks and researches that they can afford to take these risks?
Sure. So firstly, just with the caveat that I don't, particularly track these, sectors or, these stocks from a more fundamental lens. I have a more technical view, and then the ones that trade in derivatives, I have a more derivative related view. But from what I, understand, what I've heard is the fact that, these provisions were already quite high, some while ago. And if they are, sort of cutting them back now, it's not such a bad thing. But as I said, I track more from, a technical perspective, from a stock momentum perspective, and we've seen that kind of underperformance that's there, in the PSU banks. Now, I also believe the theory that, the longer people, uh, sort of avoid or deny the PSU bank rally, the higher it will go. So from my perspective, there is still a lot of room that is left in the PSU bank. Some of them are trading, below their book value, which is also a sign that, there is still room left. And if you're talking about mid caps and small caps rallying, why not PSU banks? I mean, they will also find flavor. So some of these names, like Canara Bank, Bank of Baroda, maybe not just yet, but the likes of PNB, Canara Bank, SBI is obviously the leader of the pack. Some of these names could do well, going forward.
Uh, Kush, there's another sector, the power sector. Power Grid posted its results yesterday. Pretty good. They beat expectations on revenues when revenues were expected to fall by analysts. They actually posted 1% rise in revenues. Even profits were up. Tata Power is due to post their results today, and it is expected to post profits of growth of up to 35.8% as per analysts year on year. Adani Energy too posted their results recently, and their net profits surged 47%. Revenues were up 13%. Power Grid's stock is a little down right now, 0.12%. But how do you look at this sector?
Still very bullish, because anything that had power attached to its name has actually sort of run up, and for good reason. We were seeing demand pick up and a lot of structural other changes also. So from my perspective, there is still a lot of steam left. It's just that we'll have to be very specific around the power sector. So the likes of PFC, REC, they've started doing well after a very long time. NTPC also has started doing well after a very long time. So these are multi-year breakouts that we're looking at. And given how things are, and assuming that things will continue to be the same going forward, economy wise, governance wise, I think these rallies are still at a nascent stage. It's not a bad idea to write some of these names. Tata Power sort of has been consolidating, while at the likes of PFC, REC, and NTPC have actually sort of run up quite a bit. So from my perspective, be in this space, not a bad idea to participate. Although if because of the momentum, someone's a little cautious on this, not a bad idea. Keep your allocations low, but still a good idea to participate in some of these names.
Kush, now I'll drive your attention to a sector or a space which has astounded almost everybody. That's the new age technology space. Now, we were looking at the returns on the stocks. 5 out of 6 stocks that we have on our list today had showed negative performance in the last fiscal, and all of them are in the positive. The most glaring example is Zomato, which has experienced gains this year to date of 137.84%, and it is now in profits as well. All of these stocks basically displayed robust sales growth in contrast to the previous year. The latest entrance, of course, to the pack is Honasa Consumer or Mama Earth, and the stock is up 4.1% today. I'll just take a few names. Car Trade was down in the negative 33% last year. It is up 87.07% year to date. Nykaa was minus 56, is up 20. Paytm was minus 21, is up 38. Policy Bazaar minus 8 is up 11.83. Paytm was the only one that was in the positive last year also, but it's much more. Startups basically have been subject to a lot of criticisms that they look at their valuations and they don't look at their bottom lines and unit economics. But that seems to be changing. Do you think it is time that investors start looking at these new age tech stocks more seriously? And would you recommend any?
Sure. So let's just understand why this happened, right? I mean, if you're sticking to the cricket parlance, see, it's one thing when you play in the domestic league, but when you come to the international arena, the game's very different. it was a different story when they were playing the growth, the growth story or the growth card, when the PEs were investing and they weren't listed. But once you get listed into the markets and, you still believe that, no, everyone's going to buy into that, growth story when you keep burning cash. I don't think, market is going to do that. And that's exactly what we saw when some of these names listed and, the performance after the listing. Uh, that could have been a story that played out well with the PEs, not with the, investors in the equity market. And the kind of shift that we saw in the businesses in some of these names is what is driving, the growth that you just mentioned. Also, let's not forget the fact that, Paytm, Policy Bazaar, Zomato in particular had actually fallen quite a lot from their, listing prices or their issue prices. And hence, there was some value which was already there on the table, after those falls. So I do see a lot of these names, doing well going forward as well. And our top picks right now are Zomato and Paytm, purely from the fact that, the business shift is there and the, performance is also reflected in the price. It could be that, the stocks might see a bit of a dip, and only because of technical reasons that they've, rallied quite a lot. And again, they've come to a price where, at least Zomato, 120 to 130 was the zone where a lot of, buying had happened. So you could see some selling pressure coming around this time around, and people want to exit who've been holding on for a very long time. But other than that, once this dip settles in or once these, key levels are taken out, I think Zomato would continue to, rise from here. Paytm also, let's look at the stickiness, right? I mean, these businesses have a very obvious and very apparent, usage. I mean, you and I, use a lot of these businesses, so that's not going away anytime soon. And from the price point also, as I said, that corrected a lot and we're seeing an up move from here on. So Zomato and Paytm, these remain our top two picks. Policy Bazaar, maybe, I don't see a bit of, a big movement here. Nika, not, not on our radar for now. So as I said, Zomato and Paytm, these two would be our top picks. And we do see these stocks performing well going forward.
Kush, now since we are talking about new age companies, one got listed yesterday. Honasa, the Honasa Consumer, the parent company of Mama Earth. The stock had a muted listing, opened about 2% higher. Even today, I am looking at the prices. Currently, it's about more than 1.5% lower. I mean, what is your overall opinion on the stock per se? Because, at least to me, with a portion, 80% portion of OFS, it looks like the IPO was more about giving that big exit to the investors than, really unlocking the value for the company and the shareholders.
So once again, since I don't track these very closely from a fundamental standpoint, I'll come at it from a very layman perspective. Uh, me or, not too many people that I know in my circle are either users of, the brand or investors in the company. And that's like a dipstick, survey and, a measure for me as to whether I should be parking my money in this or not. And that certainly for me right now seems like a no. So that's all I can tell you from a technical standpoint. There isn't enough data from me to, tell you what kind of price movements to expect.
All right, that's the view from Kush Bohra. Kush, always a pleasure talking to you, sir. Thank you for joining us here on First Take.
Likewise. Have a great day ahead. Bye.